Good morning, traders. Happy Monday, and welcome back to the Trader Bacon Show. I'm your host, Gates Adams, and we've got a phenomenal show for you today. Stick around. We're going to have some interesting concepts that we haven't really discussed on the show before, so you will definitely want to be around for that. In the meantime, first and foremost, we've got to take care of a little bit of business. First off, we will be giving away 3 evaluations during the course of this live show. So you'll see the in the chat, you will see the form. Just fill that out. It takes just a couple of seconds and you will be entered. And congratulations to last week's winners. I'm going to do my best. Sean, I think I got that one. Jung-Soo and Chul-Hee. I hope I did okay. But congratulations to you guys. Apex Trader Funding accounts for you guys. You should already have that information. We will be announcing this week's winners on next week's show, so make sure to come back and check that out as well. Thanks for hanging out with us today. If you don't win one, or if you're needing more than just the one anyway, right now is a great time with Apex Trader Funding to pick up an extra evaluation or a few, depending on where you are in your journey. Right now, 80% off evaluations through tomorrow night. So just make sure to take full advantage of this before it expires at 11:59 p.m. Eastern. Tomorrow, just go to apextraderfunding.com. And when you check out, use promo code Benzinga. That will always get you the best price available anytime with Apex Trader Funding. So take full advantage of that. As far as sports trader stuff, I should hopefully be having some announcements before the end of the week. I have not done a podcast episode in a little bit. I'm not sure what's going to get out this week, but hopefully going into next week, we should be good to go. But make sure to go to theforgedtrader.com/join for announcements and updates. You can also follow me online at The Forged Trader at all the socials. With TikTok, it's a 3 at the end instead of an E. That's always fun, but check it out there on the banner. All of that said, we've got some fun stuff ahead of us today. I've got Rish on the line with us, and he's going to share some different strategies and different methods of reading and seeing the market. You guys know I geek out on new stuff. This isn't necessarily new to me. It's just not something that I've ever practiced. And so I'm really, really looking forward to digging into some of the concepts behind this. So make sure to stick around for today's episode of the Trader Bacon Show. Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Hey, Rish. Good morning, man. How are you doing?
I'm well, thank you. How are you?
I'm fantastic, thanks. Hey, thanks for hanging out with us. I refer to this morning because obviously where I am, it's still relatively early, but you're joining us from, elsewhere. What time is it where you are today?
It's currently 10 p.m. where I am.
10 p.m. Okay, so not as bad as some of them we've had for sure. But hey, Thanks for staying up late and being a part of the show. I've been looking forward to this show. As I mentioned, we're going to talk about some things that are not necessarily in my wheelhouse, which just, it fires me up. I love looking into new things. I'm not looking to change the way I trade. I say this specifically for the traders out there. Don't be strategy hopping and all that kind of stuff. But if you're at a point where, you're looking for a different way of doing things, this might be an opportunity to learn something that might help move you in the right direction. So definitely want to talk about that. We're going to get to that here in just a few minutes. And Kevin, yes, thank you. Smash that like button. I appreciate the kind comment there. So Rish, let's talk a little bit about your history. Obviously you're a successful trader. It's the reason we have you on the show. But how did you actually get into the game of trading in the first place?
It probably started pretty similar to a lot of people in the industry now as retail traders, the hype around GME, AMC. It was just a fanfare of people making and losing money. And if you got lucky enough to make a bit too much, you got sucked in. And I think that happened because you start feeding in information from various social media sources, and you find yourself in a winning trade, and you try to replicate that. And you realize replicating winning is a lot harder than just listening to a couple of tweets or posts on Reddit, right? So what started off as a stock trading journey transitioned into a futures trading journey. And then the real money losing started. right? You realize you get to play with significantly more leverage than you're used to. Losses get magnified, wins get magnified. You fall into the classic behaviors of people that are suffering from a gambling problem.
Mhm.
And then you eventually, hopefully along the journey, come to a point where you realize, okay, I'm done messing around and I need to figure out how to compete in the same playing field as some of the best traders in the world, because that's where we're playing, right? The S&P, the NASDAQ, and other major instruments. You've got players from all over the world with all varying degrees of experience, and you're supposed to outcompete them. You don't outcompete them with tweets. You outcompete them with strategy and discipline. And that's what I've been trying to do since.
Well, and I think that makes a really interesting point, because you're right. A lot of people got in either, crypto bull market, COVID market, AMC, GameStop, those things. And this painted an interesting picture of the markets that was definitely, look, they made a movie about the GameStop thing. So there's definitely a lot of interest behind all of that. But when it comes to the day-to-day aspects of trading, it's not repeatable. What is repeatable is learning the strategy, learning to develop yourself as a trader, and building a foundation that you can take and not go for those, $1 million trades or whatever the case may be, but going for consistent small wins day after day after day. So how did that journey expand for you? What brought you to the point where you decided, okay, look, I'm going to day trade futures. This is the route that I'm going to take?
Yeah, I think it is when you've been a consistent loser for so long, you wonder what the strategy is that will make you win. And at the very basic level, it's why don't you just do the reverse of what you've been doing?
Right.
And for some reason, even that is quite hard to execute, because you're going against mental wiring that you've formed over the months or perhaps years that you've been doing the wrong thing.
Right.
But I think, when you watch the market go against you, and a lot of the time when it goes against you, it goes against you with force. And so I was trying to figure out, where does the market exert force? No one likes to be stuck in a trade. We don't want to be sat there, hand over keyboard or mouse for 2 hours waiting for the trade to go in our favor. We really want to be, I'm in, this either works or it doesn't work. Obviously, you want it to work, but you should get taken out pretty quickly.
Right.
And I spent a lot of time observing, where does the market move quickly away from certain points? And then some of the stuff that we're going to talk about later came into play, which is volume profile and trading on the DOM, and realizing that the market is either magnetized to certain places or repelled away from certain places. And those provide great pivot points for execution.
That's, as I mentioned, I'm very much looking forward to seeing how you read the market in that sense. I'm familiar with the DOM. I've never used it to execute trades, and I've certainly never used it without the benefit of candlesticks in the background along with it. So I think we're going to have a lot of fun with this. But when you look, we've done well over 100 episodes at this point. And this is the first time that we've had somebody trade like this. So I guess the big question for me is, are you self-taught? Did you watch a bunch of videos and figure this out on your own? Or did you work with a mentor who traded this way and guided you down this path?
Yeah, so the journey on learning how to use the DOM started with videos. There's some fantastic content on Axia Futures YouTube channel, as well as a YouTube series or video series that one of the mentors that I followed on Twitter posted on a Discord channel. That's no longer there, but there are people who have recorded that footage and kept it alive online.
Right.
When you observe these videos, right, and weirdly, the first set was filmed 10 years ago, where the market dynamics were very different. Sure. This one was from about 2.5 years ago, where again, the market dynamics are different. And that's a separate conversation, right? How quickly the market is changing now. But what you realize is that you're looking for something where you're able to observe the truth of the market. And when you watch these videos, they suggest these principles that allow you to observe truth. You see, when people use charts and indicators, you're creating a story. And that story may be true for you, but I may look at a different moving average or a moving average over a longer amount of time or whatever it is, and I come up with a different story to you, right? Whereas when you look at volume profile, there's a very objective view. It's not perfectly objective because we're still creating our own story, but it's a perhaps more objective view than your typical, Elliott wave candlestick theory, which, people come up with different conclusions based on what they see. Those videos were super helpful, and I'd recommend anyone interested in this form of trading to have a look at those channels.
Now, I think about the concept at this point in my head. If I was to decide that I wanted to work out operating differently, utilizing some of the strategies that you're about to share with us.
Yeah.
One of the biggest challenges I think that I would have is conceptually shifting from looking for what I'm looking for, which is all candlestick based, right? To just looking at what to me appears to be a very limited amount of information. And I know we're going to talk about this here in just a quick second. Were you ever a candlestick trader? Like, did you have to make that transition, or did you start using this strategy early enough to where it just feels natural and more innate to you?
Well, to be honest, I think the reason I started using this is because I wanted more precise execution. When people execute on charts, they're typically using market buy and sell buttons. Right. You end up getting filled in all kinds of places. You end up filling before the move even happens, and it goes against you. It's a mess. So I actually downloaded Jigsaw for execution's sake, and then realized that actually it's a very powerful tool to observe the market. At the time, I had both a chart up and then Jigsaw, which is the DOM. So yes, I was a candlestick trader in some ways, but I never understood candlesticks at a fundamental level because, again, the story narrative that I just provided earlier provided a hurdle to seeing the market clearly.
Well, let's without further ado, let's go ahead and pull up. I usually say the charts at this point, but it looks like we need to have you share your screen again. But let's go ahead and pull up. Jigsaw. I've never heard that verbiage before in terms of a DOM, but let's go ahead and pull that up, and let's talk about what it is that you see. Like, to me, you mentioned this when we're doing a prep call, but you're like, you look at this and it kind of looks like the Matrix. It does.
That's right.
Again, I'm familiar with what I'm looking at, but I'm not necessarily familiar with how to read it in a meaningful way. It looks like it's just fluttering along at an incredibly rapid pace. So let's talk a little bit about what you look for and how this actually works out for you.
Sure. So what we're looking at right now is on the left-hand side, you have a DOM for MES, and on the right-hand side, a DOM for MNQ.
Okay. And
each of these are the prices. So you can see, this is live right now. So ES and MES obviously are trading at 68.85, NQ trading at, and I've condensed the number a little bit to make it easier to read for me, but it's 25,888 for MNQ and NQ. Now, obviously, be different for NQ and MNQ or MES and ES because there's a different number of contracts traded.
Sure.
But the prices you can see here, and we're making a move up now. And you can see in the middle here, the number of contracts being traded at each price on either the bid or the offer. So price only moves up if there's contracts willing to buy into the next price. So you can see here that there are 37 buyers, 43, 44, and highlighted in yellow. Now, that could be one buyer, it could be 44 buyers, we don't know. But the point is, we're looking at the volume, right? So the middle column is your contracts traded at each tick of price. That gets refreshed every certain number of trades. Then the left-hand side column in blue is the number of bids sat, waiting. So those are the passive people, and here are the passive sellers, right? So you've got passive bookmarking either side of the active participants in the market, right? And then on the left-hand most side, which is what my mouse is hovering over, is your volume profile. And the volume profile is a accumulated tally of all of the transactions that have happened in the two middle columns, right? So we've heard of phrases like POC, right? That's the point of control, or the price at which the most volume is traded in the market. That's highlighted here at 83.50, right? 8,228 contracts traded at 83.50 on.
Looks like we might be having a little bit of technical difficulty. Hopefully we get him back here right quick. Rish, you with me? Well, there's nothing better on a live show than a dead air. So right as things were starting to get pretty interesting, hopefully we can get him back here in just a second. There we go.
Sorry.
No worries.
Sorry. I don't know what happened there. We have some pretty shoddy internet around here, so you'll have to forgive me about that.
All good, all good. It's that dead air that live shows just tend to love, but I think we managed to get through it. Let's go ahead and get that chart back up, because I've got some serious questions, and I think that the questions might be similar to what people in the audience will be asking. So
for sure. So I think where we left off was volume profile, right? So we've got
we were looking at the point of control. You were showing the point of control and kind of what that is meaningful, how that's meaningful to you in your trading.
Right. So now that we've gone through the kind of basic technicals of what you're looking at, what's really important to understand is the market trades in distributions. Now, people will call that a support level and a resistance level. Mm-hmm. But when you look at it on a volume profile, you'll see thickness and thinness.
Sure.
Right? When you see an area of thickness, you'll see the market trades between these prices for a decent amount of time.
Right.
And if you see thinness, it implies that the market didn't really want to trade around there.
Okay.
Now, I can kind of imply a candlestick chart merely from looking at the volume profile. If you gave me a volume profile, I could probably give you a pretty good estimate of what the candlesticks would look like.
Sure.
Because of this theory, right? Mm-hmm. The less time we spend at a certain level, the less volume we'll trade. And so you can assume, therefore, that around below 79 and above 90, which is where you can see the volume taper off, is what they call it, or in layman's terms, gets thin.
Sure.
That's where the market doesn't want to trade. Now, the trading strategy then develops around taking trades to return back to areas where you have thick volume.
Okay.
So if you look, we traded up to 92 in the morning, and most recently we just traded back to 89. We rejected from there. Why? Because there's no volume up there. There's no one willing to buy, right? And so we trade back down into the area where you have thicker volume. Now, there's nuances at play here, and there's certain situations where you actually want to trade into thin volume because you know the move is going to happen quickly. But the idea is to get familiar with how the market travels in these, what they call distributions. Anyway, I'll stop rambling, hoping for questions.
No, I think you're great. But one question came up, and you mentioned this early on through the process, that, obviously you're going to have different books on MNQ versus NQ. And I think that this is an interesting concept for a candlestick trader, because we generally will look at the charts. We can look at the charts side by side, and they move very, very similarly. But of course, we understand that what's behind that movement is always orders. So how do you find that correlates? Like, is there a significant difference between what you would see on an NQ, Dom, versus an MNQ?
I mean, I can pull it up perhaps to show you what I mean. But to answer your question, in terms of actual volume profile, they're going to be like candlestick charts, super similar, very, very slight differences, if any, right? In terms of the shape. But in terms of the number of contracts traded, because the MNQ is a smaller, quote unquote, smaller product, you'll see larger numbers being traded in these active two columns than you would in NQ. So for example, NQ will trade maybe 5-6 contracts a price, and then at most maybe 10-15. On MNQ, you're seeing kind of on average 15 to 20, right? And then at the bigger prices, you can see a tick of price trade 100 contracts even without batting an eyelid. But if you saw 100 contracts on NQ, that's a huge flag, right? That something's going on.
Now, okay, so I think we've got a pretty good idea of what you're looking for. Now, what ultimately constitutes an entry for you? And then after that, I want to talk a little bit more about some of the other concepts behind it as far as merging charts and DOMs.
Yeah, sure. So entry conditions for me are first have a view on how the market traded. You kind of want to wait for the volume to fill out first.
Mhm.
So you can see can you see my mouse, by the way?
Yeah, yeah, we've got the pointer there.
Okay. So let's say you take this and you look at the curve that's being formed in the ES.
Right.
The curve is thick around where I'm hovering, and it thins around 81, and it thins around 89.
Sure.
On a day like today, which is arguably a balanced day on ES, I mean, NQ looks slightly different today, looks a bit more trendy. On a balanced day, you're looking for trading reverse back into the distribution. So as if market was to come back up to 89, I'd be looking for shorts back into this area here because we're trading within the distribution. On a trend day, what will happen is you'll get a bunch of these distributions form. One here, one maybe 5 points higher, another one 5 points higher. In that situation, I'll be looking to trade again back into distributions, but with a different mindset that I'm not trying to buy the low or sell the high. That's not the aim there. I'm just trying to find areas where there was a lot of volume transacted and trade with the assumption that if a lot of volume is transacted, people don't want the price to move. See,
Mhm.
what this implies, this thickness implies that there is a lot of people who want price to be here,
Sure.
right? And when price moves away, they have an incentive to sell or buy so that price comes back to where they were.
Mhm. So this brings up an interesting question because, for candlestick traders like myself, we get so nervous if we potentially get ourselves into a choppy day. But it sounds like what you're talking about, this balanced area, while it may be a horrifying chop for somebody like myself, you're seeing an opportunity in this to where it's not necessarily looking for another area. You can take great opportunities within that same area that might be more beneficial in conditions that would tear most of us up.
Yeah, absolutely. So I think that's really the decision you need to make as a trader, whether or not you are interested in playing. See, okay, before I continue the answer, I think it's important to note the market has two phases. It either ranges or it discovers,
Sure.
right? In range-bound markets, you've got these kind of two levels. It's just bouncing between them, and people call that chop. When it's in price discovery mode, you'll get trend moves where you just, and in these days, I mean, arguably the overnight session today was a trend move, right?
Sure.
200 points just straight up.
Right.
That's when the market doesn't really want to bounce between two levels. It just keeps breaking the top one in today's case, or breaking the bottom one.
Mhm.
So what you need to decide as a trader is whether or not you want to make money when it's chopping or you want to make money when it's trending. And if you're good enough, you can make money when it's both.
Sure.
But the idea is to have some idea of what the market is doing today already, and then decide the strategy based on that.
So you're going to change the way that you trade based on conditions coming into it, based on what this volume profile looks like by the time you typically trade U.S. Morning session.
Yeah, typically the first hour is
Okay.
kind of where I'm. Yeah.
So you want to see what this profile looks like. This will give you a gauge of what you're looking for the day, and then that gives you your execution parameters, if you will.
Yes, correct.
Okay. Now let me ask a different question, because I think for so many of us, again, charts are just far more common than this. But let's take somebody who's been trading for a little bit. They're comfortable with trading, and they use their charts. How would somebody like that utilize something like this? Utilize a DOM and come into where they can see different opportunities, maybe in addition to what they're seeing in the charts, versus making a transition.
Yeah, I think, well, one of the best things to do, and it's just the advice that they give you on all DOM training courses, is don't do both.
Don't do both? Okay.
Don't do both. Now, do I agree with that? Yes. Personally, I do.
Mhm.
Would it be worth spending a little while just watching the DOM and saying to yourself, well, okay, let me go on sim, right? Do it with an eval so that you're not putting money at risk.
Mhm.
But I'm just going to try and trade what I see. And you'll realize that you have certain patterns as a trader where you keep spotting something, trading based off what you're spotting. And it's quite important you trade based on the same thing that you spot, right? Don't randomly place whatever trade for no reason.
Right.
Figure out what you're doing repeatedly. Then figure out why you're doing that thing, right? And then figure out if that thing makes money.
Right.
And over the course of a few days, you'll realize, okay, this isn't working, right? Then you could say to yourself, well, if that's not working, what might work? And if you find something that is working, okay, well, can I replicate it over the course of a continued amount of time, right? It could be another week, another month, whatever. The alternative, of course, is to have a chart up next to you and just watch how a chart looks on the DOM. But I think it's really important to develop one skill at a time. You know, you don't, I think about trading on the DOM and trading on a chart as two different sports. And someone who's great at cycling doesn't automatically become great at running, right? They are cardiovascular training. So yes, to some degree, you have some transferable skills, but they're not the same. And I think that's how I would look at it.
Okay, a very, very valuable guidance there. And like I said, I think there's probably a lot of people out there like me that, you know, again, we've seen it, we're familiar with it, we've watched people trade on it, and it looks, again, like the Matrix or whatever the case may be. I know what I'm seeing. I just don't know how to move it. So if this is something that I wanted to spend some time on, it would be worth, okay, maybe from an observation standpoint, spending some time looking at the correlation between the charts and the DOM. But if I wanted to be a DOM trader, it sounds like it would make sense to be a DOM trader, not have the two together.
Yeah, and you know what? Maybe you figure out that, okay, this isn't really for me, right? And I don't understand how this works. You go back to the chart, perhaps with a little bit more knowledge. In fact, you could probably just put a volume profile indicator on your chart and get a lot of the same insight without having the complication of the DOM.
Sure. And again, I think a lot of things are just really what you get used to. You know, I mean, I'm used to looking at candlesticks. You're used to looking at a DOM. I mean, there's familiarity in what you do repeatedly, for sure.
Fully agree with that. Yeah.
Well, let's talk a little bit about life on the other side. You know, we like to talk a little bit about, you know, what it looks like to get to this point. You know, of course, we brought you on the show because of your level of success. And this is something that, you know, a lot of traders are battling against and striving towards. And sometimes for some traders, it can be particularly difficult. It can take some of us decades before we get to a reasonable level of success. So once you've put in the time, you've put in the effort, you've learned skills that have translated into profitability for you, what does your life look like now as a trader? As a successful trader that is different from what you were seeing before you got to this point?
I actually have thought about this question quite a lot recently as a practice of gratefulness, because like you said, I'm privileged to be where I am. I feel very lucky to have seen the kind of income in recent months, particularly, that I could have only dreamed of before. Now, bear in mind, I made colossal losses. Like, we're not even talking, you know, the kind of losses where you've wiped your savings. We're talking savings plus some, plus some, plus some. It's like a really bad hole. So I'm working my way out of that, right? And it's a great feeling to finally see things coming in rather than going out. We've all been there where you've checked off 20 evals on a credit card and you're like, damn, that hurt. Right. And then you blow them the same day you buy them. It's like we've done it all.
Yeah.
So the life right now, cutting down screen time. I really don't like, I just don't like trading. It's not something where time spent equals reward gained. It is something where you need to spend the time to figure out the strategy. Once you have the strategy, walk away.
Right.
Because if you're lucky enough, and this is something I'm trying to convince myself of right now, you're lucky enough to extract a bit of value from the market, know that the market will take it right back if you spend too long at your.
Right.
So life for me now is less screen time, weirdly enough, sizing down. I'm trading extremely small right now because You realize when you have the benefits of multiple accounts, you don't need to do as risky a trade to make really significant sums of money.
Sure.
And enjoying life outside of trading. I think, if you're not healthy outside of the work that you do, you won't be healthy inside of the screen.
For sure.
Discipline is something you have, not something you have for trading. So sleep.
You're back.
Oh, sorry. Did I cut out again?
Yeah, we lost you there for a quick second. Well, listen, I mean, I absolutely appreciate you taking the time and hanging out with us. I'm sorry we missed a couple of the pieces there, but you paint a picture that I think so many of us have not just attempted to get to, but something that when we do get there, we tend to shy away from. Like, I'm with you. I finally have just gotten to the point where I'm starting to size down my positions and realizing that, a $200 or $300 day across 20 accounts is a killer day, right?
Yeah.
We don't have to be in a rush. And a lot of the value of trading is that quality of life that we get by not having to work 40 to 60 hours a week. And building on that is, this is pure, absolute lifestyle at its finest. We're not talking about Lambos and mansions and things like that. We're talking about quality of life, time with things that matter more than the work that we do. And I appreciate you sharing that, because so many people get caught up in the other side of lifestyle, which is the flashiness and the things that really long-term don't matter as much, but that's what generates views on social media. And we've gotten caught up in that world. So I love the concepts. I love the direction that you're taking with your growth. And man, thanks for sharing some of these insights with us. This has been a lot of fun for me. I'm not sure that the transition is something that I want to make, because I have gotten to a point where I'm pretty comfortable in the charts, but I love hearing the new concepts. And I got to tell you, there's definitely an opportunity to say, let's throw up a DOM and let's see what that correlation looks like. And maybe there's some information to be gathered and garnered from that for me.
Yeah, I really feel like if you have a strategy that's working on charts, watch what it looks like on the DOM. Maybe it'll be clearer. You don't need to even change the strategy. You're doing the same thing. It's just giving you a little bit more insight. So I really feel what you're saying, and I agree with it.
Absolutely. And as John says, $50 a day across 20 accounts is a great living. That's $1,000. And if we can do that every day, then we've got ourselves in a very, very strong position. Well, Rich, thank you so much for taking some time out of your evening to spend with us and talk a little bit about your strategy and how you manage and your life as a trader. We will be back, of course, again next week with another phenomenal guest. We're going to have a lot of fun as we continue to build on some of the stories that we've been sharing. Also, I'm going to tease this out a little bit. I'm not going to give you too much until we have some of the specifics in play, but I'm looking at doing some series where maybe one of the episodes a month is really more focused on one specific type of topic. So if you guys have any interest in different types of topics like that, make sure to reach out to me on social media at The Forge Trader. Let me know the kind of stuff that you would like to look at and you would like to hear about from my guests, in addition to what we normally talk about. All of that said, I'm way over time. Rich, thanks again for spending some time with us, and we'll keep in touch. Maybe have you back on at some point when we start doing some of the bigger series and things like that. So thank you for all of that. For all of you out there, thanks for hanging out with us again today. I appreciate it. Go get those evaluations before they expire, 80% off for another day and a half. So take full advantage of that. Plus, those do have the $85 lifetime. So if you pass something before end of day tomorrow, you can get those activated for lifetime for $85. So apextraderfunding.com, use promo code Benzinga. I'm Gates. You can find me at The Forge Trader, and we'll see you guys next week on the next episode of The Trader Bacon Show. Thanks for joining The Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern.